told you guys that I told you guys that today's class we're going to talk about this thing. I told you guys that today's class we're going to talk about the time quality TPO, right? I know most of you have probably heard of it. Um, by the way, I don't know how you guys last trading week was. But for me, I think I missed out on a lot of trading opportunities last week. It was just AUDCF. Okay, we just a buy on AUDCF I caught. Yeah, this particular one. Um, on the 1 hour time frame, you can see the first one now. This was the first initial buy we had before, um, where price came back for this type A, then mitigated and was started buying. And then what happened? We had what's more like a continuation setup where price after mitigating, this is what order flow, came back to mitigate this demand, creating another level of what demand zone. And then I told you when a demand zone does not have sweep, or when you're unsure of the demand level, like something like this now, when I saw this particular demand zone, I was skeptical. Why? Because I was looking to see if price would trace to this particular level, right? And if price is going to reduce this particular level, it means that everything here will be used as one as a form of liquidity. And that was why I didn't enter this one aggressively. I said to take confirmation. And then what happens when price got to the point of interest at this point? When price got to this point of interest, you can see that what it swept the liquidity resting at these lows, right? Swept the liquidity resting at those lows, went ahead to do what? To put in a high that's broke above what this structure, this internal high here, broke above that high, and then what happens? Even broke above this second high, and then pulls back to give what this minor form of inducement. Alright, more like an engineer liquidity form of inducement, but then which is very okay for what our confirmation entries. Remember that this is more like what the pattern confirmation. This is more like the pattern confirmation. And so when I got something like this on the 1 hour, what I did was to go to the 4 hours time frame to see if this particular setup. Well, let me cut this to make it even better. Let me see. Why is this setting time? Let me just go to it. So going to the 4 hours time frame, so I don't know whether to is you realize that on the 4 hours time frame, this particular pair now is tracing to feel a major 4 hours gap. You can see the imbalance that we had at this levels, right? We had like a lot of imbalance that price was yet to feel at this levels. So looking at what price did on the 4 hours time frame, this was the previous lower high, right? That created what this lower low. And what the price did, the price put in a new high at this point, creating what a sort of a change of character. And after that, what happened next? We started experiencing series of what lower and higher lows now and higher highs. So here becomes our new higher low. The point at which price goes above this previous high becomes our new what higher high, right? And then what happens next? We have our next structural low and our next what structural high. And then the next one again, the lowest point before the new high. This becomes the new structural low at this point. And then this becomes what? The new structural high. Then this is a structural low before what? This higher high. And then price does what? Price now starts tracing to entry. So on the 4 hours time frame, this is the leg of concentration. This particular leg is what? Our concentration, right? And if you look at this now on the 4 hours time frame, this is even a type B setup, right? This particular demand level that price mitigated is more like a type B setup. Because if you look very clearly, we had what a sweep. There was a sweep at this level, right? And then what happened? Price put in an inducement before finally what breaking out on this particular time frame, which is what the 4 hours time frame. But then our focus now is to see if our demand zone is what is in the 4 hours premium or discount. In this case, we're focusing on what discount because this is what a buy. And extending this, you realize that what that the particular buy was what it was actually in the 4 hours or the leg of consideration. There's a buy here now, and this is what the 4 hours indication, right? And then going back to the 1 hour, since you validated something like that, what do? You put in your buy to target was the previous high that price movement. This was the level of the previous high. And very surprisingly, said immediately this trade take profit. I think it was the news on AUDCF that day. Immediately this trade take profit, it just reversed like almost immediately. And that is why you have to be careful about your targets as well. I told you that your entry points are what as important as your exit points. The same way you're very careful about validating your entries is how you need to be what also careful about what your exits as well. That is why I keep on emphasizing if you want to start targeting internal highs and lows, that is what very good. This is a 1:6 setup, 1:6.53, right? Even because and that's because I even covered with both this low and the low of what the demand zone that created this confirmation, right? 1:6.5 is what is still very good. It's a good risk to reward ratio. Instead of targeting 1:100 or 1 ratio external high, which is like 1:20, 1:17, right? Which at the end of the day, you're not so sure about where price is going to revive from. Especially for the fact that last week's price action was not so bad, but the last 2 weeks price action was not, at least for me, I know that I ended last 2 weeks in loss. I had one break even and one stop loss, right? So for times like that, whereby price can just pass on you, some of the trades you can be in profit of 1:4, and then what happens? Price takes you backwards, straight back to stop loss or something like that. All right, so you need to be very careful about your targets. I think there was a guy on the group that I saw that had the buy position. Whether 1:16 or something. It was synthetics now. That guy with the big charts. And after like 1:6, price reversed on him. You need to be on, even if you want to be targeting external highs and lows, like for those of you swing trading, just know levels at which one to start taking partials and all of that. All right, so you don't end up losing money in a winning setup. That would be what's very bad. Now over to our focus of today, which is what the TPO indicator, the time price opportunity indicator. Now a lot of you would have heard of time price opportunity. I think it's the most basic part of footprints or order flow, right? Order flow. Order flow is divided into three. Order flow is divided into three. For one, we have what the most basic part, which is what the TPO. The second one is what the VWAP and one other one. I've forgotten the second name, and then the last one is what the footprint. These are what the three different sections of what. So we're going to be taking what the time price opportunity. Now, before I talk about this, I want to put out a disclaimer. Is number one, and for like very importantly, you need to understand that the TPO is not to be used in a trending market. A trending market that I mean is an uptrend like this, where price was visibly buying. Price was visibly buying, maybe due to news, maybe due to anything, right? Forget about it. When you're seeing expansion moves, just forget about what the TPO. The TPO is not to be used in what in trending markets, whether to the upside or to the downside. Maybe your price is what selling just like this. All right, we're not using it in what in trending markets. That's one. Secondly, the TPO is not a trading strategy. Order flow is not a trading strategy. I think it's even better to call it what a trading conference or a trading what confirmation. It's not a strategy. It's just what an extra conference. I'm not even teaching you what flow. I'm just teaching you the TPO part of order flow. Because I think that's the most basic one that most of you can understand and have access to just by having your premium trading view. You can have access to what the TPO. But for footprint and view exact data, you're going to need an extra subscription to those ones and view time data, right? So as I was saying, for the TPO now, first of all, you're not going to use it in the trading market. The price is an obvious uptrend or what's downtrend. It is majorly used in ranging market structures or healthy correctional markets, just like this, right? There's difference between what is happening here, where price is putting in maybe series of almost equal lows or almost equal heights, or uptrend like this, where price is moving to the upside and to the downside. Normally, what is happening here is very different from what is happening here. From what is happening here, this is what's very much different. All right, you can see that two of them are what are different. So it has to be conventional pullbacks, like healthy pullbacks of less than 50%, or more than 50% into what before the previous higher low, or series of what equal lows and equal highs. But it must be in either ranging market structures or healthy market structures. All right. But when you see the market trending in one direction, don't say because price has gone below PAL, PA8 or whatever, you want to what, start buying or what selling. And like I said, the TPO is not what, it's not a trading strategy. If you don't understand it, it's not a do or die affair. To be honest with you, sometimes I even forget to use TPO for my confirmations. Right? I don't use it all the time. What you know about structure, liquidity, and your point of interest is enough. But then this is just what something extra for those of you that would need what the knowledge. Because I realized that I was using it a lot when it comes to cryptocurrency. I used this a whole lot on cryptocurrency, right? When I actively traded cryptocurrency earlier this year. So it's something that might catch your fancy. But please and please and please, it's not a strategy. Like I said, and like I will keep on saying, it's just what a conference. If you don't understand it, leave it alone. All right, leave it alone so that it does not interrupt with what you're doing normally, technically. Right? Let's not disrupt your progress already, technically. So now let's start. Now the TPO or the time price opportunity is an indicator. You can get access to it on TradingView, or I think it's just for premium users. Even the pro users don't have access to it. That's the essentials and the rest of them. It has to be what for just premium users. So when you go to the indicator part of your trading view, you just search TPO. I think when you search TPO or when you even type time, it's going to appear, which is what this first one here. You can see time price what opportunity, not the session time price opportunity. The first one, which is what the time price opportunity. Now, when you tap on it, it's going to be something different. There'll be pink colors, this, that. I've set my own already, so I don't think mine is going to look like your own. This is what mine looks like. TPO 1 day. All right, this is what mine looks like. More organized than yours would be. That was for first time that I get to set yours. All right, this is what my own looks like. So then I'm just going to double tap on this. Okay, this is my view app. Just the TPO, that's focus. All right. Now, I want you guys to, if you want to take a screenshot of the settings, you can. If you want to, maybe after the class, you can. The call is recorded, so even if you're not taking a screenshot now, you can always have access to the recording to set yours later. First of all, the volume profile, show volume profile is important. Then the VAH and the VAL is off, don't extend, right? The values. So for this particular volume profile, only the volume profile and the PUC is on. Then your volume, if you want to make it like mine now, I reduce mine to 40%. so that my chart is not too thick. When you take this to like 100%, to see how dark things they become. So I usually use 40% or just below 40%, something like that, right? So it's not so bright. So it's not so dark, and I can no longer see my normal charts. The same thing for the value area, right? Whatever you want to use, just make sure it's around 50, maybe 50 and below, right? And then for the inputs, my period, my day, my block size, my auto, your ticks per row cannot be edited. I think some of you may be seeing 45 ticks per row, some can see 80 and all of that, right? Sometimes it's even 2, something like that. For now, this one in my own one is what 75. For every other thing can be adjusted, right? So you can just adjust all of them. You can take a screenshot or you get access to the video later. Then the style. Now for my gradient colors, like I said, I usually reduce the color so it's not so dark. But this one is just what 12%. This is 14. This is 14. This is 10. Let me increase this to 14. Okay, and then I do alright. So usually like 14 to 15. So it's not so bright, at the same time it's not what so dark. Alright, opacity outside of VAL, which is you can put this however you want it to be. I will show you guys, I will explain what all of this means, right? But then your POC should be on. I think usually the POC color, I don't know if it's purple, yeah, it should be purple or something, right? So just change it to red so that you can differentiate between the POC and the single prints, right? So turn this to red. Mine is on 37%. The poor high, the poor low. I think they should be black. So turn yours to yellow or something different. Then the single prints, mine is purple already on 15%. You can make yours a little bit brighter. I don't use single print stats that mine is like that. The value area high and then the value area low. Put all of these ones on. The TPO midpoint, there's no need. Open and close, no need. Initial balance range is 2, right? Then visibility, everything unadjusted. It should be normal. This is the default. Okay, and that's the settings for the TPO. When you're done adjusting yours just like that, it should look what exactly like what my own looks like now. Alright. Now the TPO has different parameters. But then these are the most important ones. The first one is what? The VAH. The second one is what? The VAL. First one we have the VAH. Second one we have what? VAL. Third one we have what? POC. Then we also have what? Single prints, which I'm going to introduce at what? SK. Let's start with VAH. Alright. Now if you look at my charts, I'm going to expand so you see what I'm doing. Here you can see a VAH. Here you can see what? A VAH. If you look closely again, you see what? Another VAH. You see VAH. You see VAH. Right? Now this VAH, like you see VAH. Now VAH means value area high. The V for value, the A for area, and the H for what? High. Value area high. Alright? VAL means what? Value area low. The POC means what? Point of control. And then the SP means what? Single print. Now let's start with the VAH. Now there's something called for the order flow, for the rule of order flows, right? Order flow, there's something called open market theory. Now the open market theory states that when price is above the value area high, you're looking for sales, and when price is above, when price is below value area low, you're looking for what? For buys, provided it is not what? A trending market. I already explained what a trending market is before I started the class, where I talked about when price was in an obvious direction. Forget about what? Counter trending. Alright? So when price is above a value area high, you're looking for what? For sales. And when price is below a value area low, you're looking for what? For buys. It is very similar to your supply and demand zone. So you're buying at demand and you're selling at what supply. You can see that the value area highs are usually what found up. The value area lows are usually found what down. All right. So every day has its own. I need you guys to follow me. Like you have to follow me keenly. The moment you miss one thing, you miss what I'm saying. That's just the absolute truth. All right. If you have to drop back, just ask a question. Or somebody should please keep my attention on it. Or somebody saying something that I should say. All right. Now, as I was saying, every day has its own value area low. Every day has its own value area high, and every day has its own what points of control. All right. Every new day has its value area high. Every new day has its value area low, and every day what has its point of control. The point of control is just the zone with the highest trading order in that day. All right. You know your order flow is all about orders to see what's happening in between these candlesticks. Let me show you guys something real quick. Now this is let me show you something. This is the usual candlestick you see. But then when you go sorry, let me put my TPO off. Alright. But when you look in between these candlesticks, so you're no longer seeing just the usual candlesticks that you're seeing. Now you're seeing what is happening in real time. In between these candlesticks, you can see what you can see orders. All right, you can see what actual orders in between those candlesticks. Now, if you look at something like this now, when price mitigated this entry, this was what? This was a positive data, right? Data was what 123 ended was positive, so that there was a buy strength on that point of interest. I'm sorry that I'm debating to footprint though, but I'm just trying to show you guys that in between the candlesticks you're saying, things are actually what? Things are actually happening. All right. So that is what order flow is all about. Order flow is showing you what information, like what traders are actually now. When you're analyzing technically, technical analysis is showing you what you're able to, I don't want to say predict, but you're able to anticipate what price will do. Now with order flow, you're looking at what price is actually doing on your POI before maybe you decide to buy or all of that. So that's why I said it's not a strategy, it is what a confirmation of what you've actually already done was technically. So looking at this our time price opportunity now, I'm saying that the rule of what option market theory in order flow states that when price is above your value area high, you're looking for what? For sales. When price is below your value area low, you're looking for what? For buys. But only provided it's what? It's a trendy market or a healthy market correction. It's not be provided it's not what? It's not a trading market, sorry. It must not be something like this. Do you understand? Let's not be that price is obviously moving in one direction. And then because so that price has taken out the previous base value area, they start looking for what? For price. Right? That would be what that would make you end up with taking a loss. All right. Now, as I was saying, every day has its own what? Every day has its own value area high. Every day has its own POC. Every day has its own VAL. Every day has its own what? Single prints. But then let me start from the easiest ones to the hardest ones. Or the ones I'm not going to be using. Now the single prints are the ones that I represented in a purple you can see these purple lines. I remember I told you when I was talking about that your single print can be red. I think usually it is red, but then I changed mine to a purple setting so that it is different from the POC. Now you can see this POC extended. Now you can see a red line here, but then these lines that are extended purple, they are what? They are single prints. Now the single prints is just like you know the way technically we know it as imbalance. When it comes to order flow, they know it as what? A single print, sorry. Impulsive movements to one direction, either to the upside or to the downside without reactions. That is what the single print does what represents. Like in this case now, you can see this particular candlestick just selling to the downside without interruption, without any reaction. And then the purple lines are indicating that this is what happened here. I want you to just recognize that what imbalances. They don't call it imbalances here because of course they are more powerful than the imbalances are. But then if you're going to visualize it, I want you to visualize that what as imbalances so that you understand it or you can recognize them better. All right. If you look at this particular candlestick now, where we had this sell to the downside impulsively, what happened? You can see what the single print indicated that okay, over here, what happened? We had what movements to the downside without what reactions. All right. So usually people trade. Most people that trade other trades, some of them trade with single trades. I don't know how to do that. Even when it comes to technical analysis, I don't take my trades off averages. All right. So, but then people trade something like this. There's that it's more powerful than the averages are. I think some of the times, quite usually, you can see this particular reaction now to this particular single trade, and then you had what this sell. So they usually know how they do their thing. But then for the next one, which is what the POC. Now the point of control is usually, I told you, every day has its own what value area high, every day has its own value area low, every day has its own what point of control. Now let's look at this together. For this particular day, this was Friday, May 30, right? This was Friday's price action. And if you look at this was Friday's value area high, this was Friday's point of control, this was Friday's value area low. All right. Continuing, this was what Thursday's value area high. This was point of control. This was what value area low. All right. Next one, value area high, point of control, value area low. Value area high, point of control, value area low. Just like that. Every day has its own words. Value area high. Every day has its own word. Point of control. Every day has its own word. Value area low. All you have to do is just place your cursor and it's going to show you the day, the time. All right, the day, the time. Let's see, Monday. Come here. This is Tuesday. Sorry. Come here. This is what Wednesday. All right. Come here. This is what this is Thursday. Come here. Then this is what Friday's price action. All right. Now every day has its own what its own value area high, POC, and value area low. But then here's the thing. For a new trading day, please, I need you guys to follow me step by step. For every new trading day, you're using the value area high or value area low of the previous day. Which means that if you come to a new trading day now, in a balanced market, you're going to be looking to buy when price is above, let's say today is Wednesday. Yesterday was what? Tuesday. It means that if I come to the market on the Wednesday, I'm going to be looking for what to buy when price is above Tuesday's value, to sell when price is above Tuesday's value area high, and to buy when price is below Tuesday's what value area low. All right, which means on Monday you're using the previous Friday's price action. On Tuesday, you're using the previous Monday's price action. On Wednesday, you're using Tuesday's price action. On Thursday, you're using Wednesday's price action. On Friday, you're using Thursday's price action. And on Monday, you're using what? Friday's price action. So you're using the previous day's value area highs and lows to react. All right, provided, like I said, it's what in a healthy market. So here's the thing: usually when price goes above value area high, it sells, and when it goes below value area low, it buys. Like if you look at what happened here now, this was Friday's price action, all right, and this was Thursday's value area high, Thursday's value area low, and Thursday's what point of control. And if you look at what happened on this particular day, on the 4 hours time frame, I'm sorry, I'm using 4 hours now. All right. Now price did what? Price went above Thursday's value area high. This is the line for value area high. You can see this particular thing here. This is what the value area high. I don't know if my chat is soon enough. Chams, can you see my value area high?
Yes, I can see it.
All right.
I can see it.
No problem. So this is like the value area high, and you can see the moment that this candlestick went above the value area high, what happened? We registered what? We registered a sell to the downside, and then the market was closed at that point. All right, the market closed there. The registered price retracing to the downside, went below the value area low, we registered what? Price. Usually when you see price below value area high, you're looking towards to buy. When you see price below value area low, you're looking to buy. When you see price above value area high, you're looking towards to sell. But then this is where your own strategy now comes in, which means that when you see price below the value area low, you're not buying carelessly. You have to buy on your valid setup. That is why I said it's not a trading strategy. It is what? An extra confidence. If it was a trading strategy, it means that immediately you see price above value area high, what do? You sell. Immediately you see price below value area low, what do? You buy. Right? If it was a trading strategy, that's definitely how you would have treated it. But then it's just a confidence, which means that when you see price below a value area low, what comes to your mind is next is what? Is where do I buy from? Where am I going to buy from around below this value area low that can send price back up to the upside? All right. Like if you look at this particular day's price action now, this is what? This is Thursday's value area low, right? And then this is what? Friday's price action. So let me put this off so that my chart is not overwhelming. Okay, this was where Thursday's value area low was at. Now when you see price, this particular candlestick has gone what? Below what? Has gone below the value area high. The value area low, sorry. What comes to your head next is what? Since price is now what? Below value area high. Below value area low, sorry. Where can I what? Where can I buy from? All right, where can I buy from to get price back to the upside? Which brings up what? This particular demand level there. Price came, went below value area low, mitigated this demand and did what? Bought to the upside to create this high. Let me put back my TPO indicator again. And did what? Put in that high. And what happened? It went above what? It went above a value area high. This was the new days, this was Friday's value area high that was at this point. And price went above it. Sorry, I think I should clear some of these markers so that it doesn't get. Just 1 minute, let me clear most of the markers on it. So as I was saying, this was what? That particular value area low. The price went below. This was what? Thursday's value area low. The price went below. And then what happened? Looking at, okay, where next can price was reject. What did price do? Price went what? Below, mitigated this point, and then did what? And bought to what? To the upside. This was where what? Friday closed at. And then if you look at what happened, now Friday's price action did what? Went above the previous days. This was Friday's VAL. And then the opening on Monday's market opened what? Above Friday's value area high. This was Friday's value area high. And this was what? The opening of Monday's market. We went what? Above Friday's value area high. What comes to your mind? Sales. All right? Sales. Where can I possibly sell for? This was, although I don't know if this was going to be valid on the 1 hour time frame, but then there's like a hidden demand, hidden supply zone around this area. I don't know how valid that would be. But then, if you look at what happened, we did what? That particular date price action established sales as retracements back to what? Back to this point of interest. And what happens again? Price goes below this particular day's value area low at this point, and we registered with significant buys before price did what? Went towards the value area high and did what? Sold down to this entry. Went below value area low again. What did we do? Registered with buys. So usually when price goes what? Below value area low, you're looking for what? for sales. When price goes above value area highs, you're looking for what, for buys. But I emphasized on the fact that it must be in a what, in a non-trending market. That way, it's not what, it's not when market is consistently buying, you're looking towards to sell at value area highs. But when market is consistently selling, you're looking towards to buy at value area lows. That way, you're going to take losses. And like I said, when price is below value area low, the only reason why you would buy because price is below value area low is that you see your valid setup there. It should just be an extra confidence. Oh, okay, structure, point of interest, liquidity, and everything. I've gotten my POI, and then extra confirmation. I have what, value area low just for my POI, which I expect price to buy. When price goes, what takes out the previous base value area low, makes it what sound better. Or okay, price just went above value area high, and my POI is just there to send what price back down, which makes it what sound better. So it's a confluent, not what a strategy. It's just something that what you attach. All right. I don't want this particular class to be overwhelming, so I think I'll just stop at this VAH and VAL. Then the next class we're going to what continue from where we stopped, and then look at what valid examples of all of them. All right. If you have questions, you can ask. But then just know that this is just what like the beginning. It's not concluded. I don't want it to be too bulky so that people can follow and people can flow as well. All right. So this is where I'm going to stop. The recording is going to be sent to the group. I'll ask Stan to do that when he's online or when he's free. He's going to send the recording to the group, and then you guys can want to go over it. And when we meet, we're going to want to continue from where we currently are. Like I said, I don't want this to interrupt what you're already doing technically. If you think it's something you could be able to perhaps or understand, it is very okay to leave it out. It is not a compulsory thing. Most people don't even have knowledge of order flow or any of the segments of order flow or even applying or anything, and they are still what profitable. It's just an extra confidence. It's not a do or die thing. All right. So don't if it's looking ambiguous, just step out. Okay. So I'll see you guys again on Saturday by 9 p.m. Before then, if you have any questions, any concerns, any issues, just drop it on the group, the respective subtopics and tag it to it. For those of you already trading conference, well done, and then good luck this trading week. I wish you a better trading week. And don't forget, please and please, if not for anything, only trade setup that meets your criteria. The reason why I gave you your checklist is not for fancy or decoration. It's because every of the trades should meet each of them before you call it a valid setup. Some of the times that people reach out to me that, oh, I'm taking multiple losses. Please look at the I ask them, okay, send your setup, and then the moment I see the setup, I'm seeing so many things wrong with it at first. I told you, before you execute any trade, let it be that you met with your 6/6 validations. The validations are there so that at least you can be in the right direction. Let's not be that. Let it be that you did everything right and took a loss. Than taking 10 losses because you're, I don't know, I just drawing whatever you like to draw them. All right. Of course, it's step by step. You're going to learn and experience as time goes on. But then I don't want you to keep wasting time on one level when you are actually smart enough to move on to the next. As much as the whole solo thing is here and here and there, it shouldn't be that you're the one to do yourself. Some of you are so due for more growth, more results, and all of that. I want you to, put in more effort. Stop taking avoidable losses. The people on the winning setup, they don't have two heads. You as well, you don't have what, two heads. Look at the trade ideas that people are dropping. See if it's the same thing they are doing that you're doing. Look at the winning setup. See if what they did is what you would have done. These are how you learn. These are how you improve. Look at what people are doing. Am I on the same track with these people? You understand? You're not any different. All of you learn the same thing. Some of you are trading your previous strategies and then still dropping it on the losing setup for me. I don't understand who told you to trade support and resistance and all of that. All right. So you trade with what you know before and then you're just like dropping it on the losing setup, and then it's really discouraging. I told you. It's easier for a newbie to come into this space with the right information and make it than somebody that has that knows a lot before, because it's difficult to unlearn. It's easier to learn than it is to unlearn something. All right? But then try your best. Try your best. Forget about things that were not working for you and focus on what seems like the light, which is actually the light. All right? So I wish you guys the best trading week. As usual, if you have any concerns, anything, any questions, start me on the group. And then have a good trading week. And see you guys again 9 p.m. on Saturday. We'll continue the stops. Until then, we'll take care of yourselves.